Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, registered investment advisors, family offices, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion, the CEO and founder of Flying V Group. They are a digital marketing partner. You figure I'd know how to say that by now. Rob, how was your week?
That was great. And you just said marketing partner twice, so I think I got two times bang for the buck. So it's all good. Great little air right there, Gary. I appreciate it.
Yeah, perfect. How was your Independence Day?
It was great. It was great. I'm definitely feeling it right now. We were talking about it a little bit before the show, right? But Thursday, I think, is the best day for a holiday to fall on because you got Thursday and then Friday is still pretty slow, right? Maybe a call or two, and then you got the weekend. But I had the in-laws in town, which was great. I'm not complaining about that, but we were go, 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 go. So Monday morning was felt more like a Thursday or a Friday.
Oh, yeah.
A little too much fun. How about yours?
It was nice. I live in a small town in Connecticut. There are about 27,000 people in this town. We have a beautiful beach, and every Independence Day, literally half the town, 15,000 people go to the beach. There's a fireworks show, so everybody shows up early,
Awesome.
picnics on the beach, opens bottles of wine or cocktails, little kids running around with sparklers, teenagers hanging out there. Literally the entire town shows up. It's like something out of a Norman Rockwell painting. It's just really nice. Great way for, the whole town, all the neighbors to get together and celebrate. It's just a fun thing to be part of.
That is cool. Yeah, being here in Southern California, I don't know if the entire nation knows, but we love our fireworks here. I think being pretty close to the border definitely helps as well. So it is quite the show. Even if you're not looking for a fireworks show in Southern California, you're probably more than likely going to get one either from your neighbor or whoever it might be down the street. But yeah, we had a great time. Pretty low key barbecue fireworks show as well. But yeah, that sounds amazing. Actually, I love small town community like that. That's good stuff.
Yeah, I mean, it really is like sort of this classic Americana
Right.
painting of America. It's nice to be part of, seeing all the little kids running up and down and the parents having to drink together, and people are just really happy to be there. It's a
Well,
fun event.
let's get into the five things
All right.
and good segue right into the topic of this week's five things. We are calling this issue the British are coming issue. So I'm sure we'll be picking up some tidbits in terms of why that topic is, and if there is any ties to the 4th of July, Independence Day, maybe a little jab. We'll see. We're talking about Fed Chairman Jerome Powell once again, more job data, and just getting to the point of not surprising how predictable this mess is to DKI readers and followers. Talking German government, UK government. That's our little British piece there. And then also looking at restaurant sales this week, something that we haven't talked about in the past. So looking forward to that. Gary, ready to jump into it?
Let's go.
Thing number one, disinflation, but not enough to cut. Gary, what is Jerome Powell saying?
So first, Rob, let's just start with the obvious conclusion here. Anyone want to say it with me? Higher for longer. Uh, it's that's where we
Need
always end
shirts. We
up.
definitely need shirts.
Yeah, right. We should, oh, that's a good idea, right? We
Yeah,
should
right.
merch. We
Yeah.
need merch. So Jerome Powell, the Fed chair, was speaking at the ECB forum in Portugal. Now, the reason this is significant is the world has started to move a little bit. We are now in a position where the world is heading more toward easing a more dovish stance. So over the last few years, central banks all over the world, except for Japan, raised rates. People say very aggressively. My view is we went from ultra low to very normal rates. That point of view isn't necessarily so popular, but it's one where there's historical precedent for it. At this point, the European Central Bank has cut. Canada cut. We talked about that last week. We talked about Canada making the Arthur Burns mistake, where they cut rates and all of a sudden they got a hot inflation print. That will happen. But basically, with Powell in Portugal and everybody shifting to lower rates than the US, Powell came out and he was very clear, saying in Europe the same thing he's been saying here in the US, and the same thing that's been in the Fed minutes and their press releases. He's concerned that cutting too soon will cause an inflationary spike. That is the Arthur Burns mistake. That's the same thing Canada did. And Powell further said, and this was a brilliant move by him. And again, I've been critical of Powell. I've been critical of the Fed. This was a brilliant move by Powell. He thinks, and he said out loud, that the strong economy in the US gives the Fed time to proceed with caution.
Gary, reading through what Powell has been saying, we know you've been critical of him in the past. It seems like he's moving in more alignment with what you have been saying for quite some time now. My question is, did you replace Jerome Powell?
Absolutely not. No. Although I just want to reassure everybody that if anyone with influence can somehow get me in the position of being chairman of the Federal Reserve, I give you my promise that I will close the building, send everyone home, shut it all down, let the market determine it. You guys can pay my salary, not pay my salary. I don't care. Let's just shut down the whole operation. That is my promise to all of you if that were to happen, which the probability is right around zero, or actually at zero. So here's the key thing. The reason Powell talking about the strong economy giving the Fed time to proceed with caution, that was a brilliant shot at Congress and the Treasury. So, Rob, on this show, we've talked many times before about what I've termed as the secret war between, or the quiet war between Powell and the Fed on one hand, who want to raise rates to cool the economy and get inflation under control, and Congress, which has been spraying trillions of dollars of stimulus into the economy, and the Treasury that's monetizing it. All of that is creating inflation. For the partisans in the crowd, I do not think that this blame for this ridiculous fiscal irresponsibility in Congress falls on any one party. If you're on the team blue, team red, don't bother sending me the hate mail. Everybody's to blame. Both parties are overspending and both parties are approving overspending. So that's a nonpartisan opinion. But Powell actually came out and he flat out said that he thinks that the congressional budgets are unsustainable. So there it is. He'd been really gentlemanly and careful in the past and always said, hey, listen, I don't have control over what Congress does. They're going to do what they're going to do. And he avoided commenting. But this is a situation where he just came out and just flat out said, this is not sustainable. And he's calling Congress out. And from a strategic point of view, it was a brilliant thing because members of Congress who want to get reelected are saying, hey, Fed, come on, lower rates. We want a hotter economy. We want to run for office with a higher GDP and people making more money. And I understand why they want that. For Powell to fire back and say, you guys, like, your spending is ridiculous. And this is the reason, you're throwing so much stimulus into the economy. I have the luxury of not having to cut. I thought that was a really strategic move on his part. It was a really smart way for him to fire back and put the blame where it belongs. The Fed is responsible for keeping rates far too low for far too long. But at this point, rates are pretty much kind of at historical norms. And what's happening right now is the fault of Congress, in my opinion. I think Powell was smart to respond that way. The other thing you said, Rob, that I think is worth pointing out is I'm reading here, he said he did not think the Fed could get inflation down to the 2% target before the end of next year. Not this year, next year. We're talking the end of 2025. So, right now, the futures markets, the interest rate markets are betting that the Fed is going to cut by September. Now, could that happen? Sure. But Powell has flat out said, we're not cutting until we see rates going sustainably to 2%. And he just came out last week and said, yeah, maybe at the end of 2025, we'll get down to 2%. If that's what he thinks, the market thinking he's going to cut in September is basically a bet that the market thinks the economy is going to collapse over the next 2 months. Now, could that happen? Sure. And if it does, I will absolutely change my point of view. But for now, I think as of this morning, the market was betting something like 65%, 66% of a September rate cut. I'm taking the under. And have explained the reasons why. And, the thing that would make me change my mind and say, okay, I was wrong, we should expect a cut by September, would be a total collapse in the economy over the next 6 to 8 weeks. So that's the time frame we're looking at on that September cut. My opinion, and I'm going to play your part, Rob. It is July 8th.
There we go. Appreciate that. And we will stay in tune as that September date approaches here shortly. Thing number two, Gary, we're moving to our favorite employment data. Thing number two is the employment data in quotes. I actually love that. The employment data gets even worse.
Yeah. So I don't know how many times I have said that because the employment, as you said, data, right, is so flawed and so worthless and so non-predictive and just gets revised into ridiculousness. I've said this so many times, and I keep saying I'm going to stop reporting on the employment data because it's useless. And then, I shifted. Now, instead of reporting on the employment data, we shift on how, and now we talk a lot about how unreliable the employment data is. And I just might have like some form of employment data economics OCD because apparently I cannot give this up. I can't let go of it. But let's talk about the data. It's not even data. On Friday, the new jobs report showed that the June non-farm payroll growth was 206,000 jobs. That was higher than the expected number, which was 200,000 jobs. Pretty close. Listen, if you're an economist and you say 200,000, the real data comes out at 206, you're like, okay, good. We were pretty close. For people who don't follow this data on a regular basis, adding 200,000 jobs in a month, that's actually pretty good. That would be a sign of a strong economy. So what's the problem and why would I be complaining? Let me explain. So the 200,000, 206,000 jobs, it sounds good until you notice that the May data was revised down by 54,000 jobs. The April data, which had originally been revised down, I think by 10,000 jobs, something like that, got revised down again by an additional 57,000 jobs. So people were saying, hey, strong economy, the employment number beat. Okay, the employment number beat by 6,000 jobs, but the prior 2 months were revised down by a total of 111,000 jobs. Right. So this is why the data is ridiculous. This is why the data is completely pointless. How we've got a 206,000 job number, beats expectations by 6,000. The prior months revised down by 111,000. They're not even close.
Yeah, I think that's still a deficit, no matter how you count that up. Gary, you put out a chart by Zero Hedge, and they did a good job illustrating in terms of the government. Correct me if I'm wrong, actually, Gary. Was their chart for the 100% growth in job openings being government related? I'm blanking, actually. I
Yeah.
apologize. Yeah.
No, that's right. So I'll tell you what has happened. As anybody who's a regular watcher of this show, of this channel knows, I've talked a lot about the bifurcation of the economy. There are a lot of people saying, no, the economy is good, GDP is good, employment is good, wages are good. And this is where we are. It's all fine. I've disagreed with that. I've said what we have is an economy with a small number of people doing extremely well. The government sprang trillions of dollars of random stimulus into the economy, allowing a lot of people who aren't working um, to not work. And we have a large, large number of people who are working, but their wage growth is not keeping up with inflation and they're struggling. And we've talked a lot about how food prices are up, gas prices are up, car prices are up. I mean, the simple, everybody knows rent and housing, right? The simple act of paying your rent, getting in the car, driving to work, and paying your grocery bill has become really difficult for a lot of American families. So I disagree that we're in a strong economy. I've talked a lot about how the public market economy, the government spending is pushing out the private economy, the place where people make real money and real wealth and pay real wages. Credit to Zero Hedge. They put out a fantastic chart showing this in one chart. And basically what the Zero Hedge chart shows, and I'm sure Andrew will throw it up for you, is that more than 100% of the job openings are in government. The growth in job openings are in government. And if you look at job openings for the private sector, they've been decreasing. So, right. And let's be clear, the Zero Hedge chart is talking about the job openings. At the beginning of this segment, we were talking about people who are employed. It's not the same thing, but I thought the Zero Hedge chart did a really nice job of showing all of the growth in available jobs is coming from government at the expense of declining job openings in the private sector. And again, the government can't create value. All they can do is tax people and then spend inefficiently. It is the private sector that creates wealth. It's people in the private sector creating companies and creating jobs for themselves. It doesn't have to be big corporations. In this country, we still have a huge number, tons of people are employed at small businesses. That's where Americans make their money. That's where we create value. That's where we create wealth. And Zero Hedge is showing that that part of the economy is declining. It is consistent with Deep Knowledge Investing's thesis on the whole sector.
Yeah, I know just from anecdotally talking to individuals, business owners, right? It does seem things are slow, right? Anybody you talk to say, things are slow, things are slow, things are slow. So yeah, I apologize, I got a bit mixed up there, but yeah, that Zero Hedge chart does a great job. As you've probably seen it already if you're listening to this now, but just that spike in the public sector and a continuous decline in private. And I also get to tell my good friend that we talked about modern monetary theory in terms of the economists lauding our strong economy, but you reminding us, Gary, that that's because more government jobs lead to GDP growth, destroying value. And when he asked me what I think about that theory, I will refer to you. Moving to
Rob,
thing number
next week, we're going to switch seats.
yeah,
Right? I'm going to be the
I'm
host.
getting there. I'm
You
getting
nailed it.
there. I'm getting you. I'm giving you so much more props now because these big words can sometimes be quite tongue twisting, but we're doing just fine. Thing number 3, Gary. We're going to Bitcoin. Bitcoin and a test of strength. Tell us more.
All right. So everybody who follows Bitcoin knows that, it wasn't that long ago that Bitcoin had an all-time high. I want to say 73, 74,000. Over the weekend, it dropped below 55,000. Now, if we're taking a step back, right? If a year ago you would have said to Bitcoin holders, Bitcoin's going to be at 55,000 next year, everyone said, great, that's fantastic. If on Jan 1 of this year, people would have said, you're going to have Bitcoin at 55,000 halfway through the year, we would have said, okay, great. That's terrific. We're happy with that. But, there's been this big decline recently. And at the end of last week and rolling into the weekend, we had a lot of downwards volatility. Some of it's been made back. But let's talk about the reasons. I think there are two big things going on, but they're both temporary. One is the infamous Mt. Gox saga is nearing its conclusion. It's taken a decade to sort this out. If just a reminder, there are 127,000 creditors that are going to receive about 142,000 Bitcoin starting in July. There is this sense that, they've all been waiting, and once they get their 142,000 Bitcoin, they're going to instantly sell. I don't know that I agree with that. Those were people who have had every opportunity to sell their interest. They could have sold their interest in the Mt. Gox thing. Now, could they receive it and then sell? Sure, they could. But even if they do, that's a one-time event. The other thing that happened is the German government has been causing some turbulence. We read that they offloaded about 10,000 Bitcoin in recent weeks. I think it started on June 19th. So this has been going on for, about 2-3 weeks. And then the really interesting thing is, and credit to DKI intern Alex, who sent me this over the weekend, apparently the German government reversed course and they bought something like $100 million of Bitcoin. So they bought it back. And then I don't know if this is true or not, but there were stories on Twitter or X today that the German government was selling more Bitcoin. So at the end of the day, I do not know how much Bitcoin the German government owns as of today. I don't know how much they're going to own a year from now. There are going to be sovereign nations that have an interest in buying Bitcoin and selling Bitcoin. Truthfully, I don't understand why all of these governments who are printing trillions of dollars of worthless fiat don't just print more trillions of dollars of worthless fiat and buy Bitcoin and gold. I mean, if you had a printing press, wouldn't you just run the paper mill and buy Bitcoin and gold? But anyway, the point of all this is, even if we assume the German government sold that 10,000 Bitcoin, and then again, there were stories that they bought some back, they sold it again, they still own something like 37,000 Bitcoin. Now, as a reminder, the current supply is over 19 million. We're approaching 21 million, max supply of 21 million. at the end of the day, is this a big deal? No, it's short-term trading noise.
Gary, I know we've seen some recent price pullbacks with Bitcoin, a little bit of market jitters. You want to talk about those and make sure people don't forget Bitcoin ETFs. Why is that, and why are you focusing more attention there versus what seems to be these just one-time occurrences?
Because the Bitcoin ETFs had billions and billions of dollars of inflows. They set records for most inflows in. Now, I think I don't want to get the credit wrong. I think it was Jim Bianco on Twitter or X. It was either last week or over the weekend. He put out a really interesting thread, and his thesis, and he had some great charts to support it, was that the Bitcoin ETFs didn't actually bring in new money. And I think he did a good job supporting it. His point is that people expected that the Bitcoin ETFs were going to bring in, the baby boomers, the older people who have a lot of wealth but aren't comfortable holding digital assets and self-custody. They want to see it in their brokerage account. And that there was going to be all this new money coming in and money from pension funds. And, maybe some of that may still happen. As a reminder, pension funds, they don't move quickly. Right? These guys evaluate their exposures a couple of times a year. They'll move in slowly. Surrounding the ETF creation, there was the Bitcoin dollar price went up a lot into that approval. It went down a little bit after the approval, but then shortly after started to go up again to reach all-time highs. So I don't know. There does seem to be increasing interest. The price is higher, and the ETFs have gotten really big. I just want to be cautious on this again because I think Jim Bianco did a really good job showing it. What's really happening there are people are taking Bitcoin off of the exchanges like Coinbase or Kraken, or out of self custody, and they're putting that Bitcoin in their brokerage account. So basically, they're selling self custody Bitcoin and buying ETFs. He could be right on that. My counsel to everybody is do the opposite. Get your Bitcoin off the exchanges, get your Bitcoin out of the ETFs, and learn to self custody. For people who are interested, just put a note in the comments. We've published a guide to self custody. I understand that it can be scary to send Bitcoin from one place to another. There's no help desk. You can't call 1-800-BITCOIN. There's nobody to talk you through it. But we've written a guide to it that makes things as simple as, fill in this box, click this button. It's all annotated. We make it really simple for people. And I would just encourage people that if you're to have some money outside of the system, I would encourage people to learn how to self-custody. Again, if you want to know, put it in the comments. We'll get you a link to it, and that information is all out in public and really easy to follow. But it's going to be interesting to see what happens. The other thing I would add, Rob, is that I think the temperament of the long-term Bitcoin holders is phenomenal for investors. This is the most long-term diamond hands community in the world, right? The Hodlers, as they're jokingly called. Their view is, well, who cares if Bitcoin goes down? We'll just buy more, right? These are the best dollar cost averagers in the world. Like we don't care. When it goes down, we'll buy more. We're not selling. And I do think that will win out long term. Certainly there's, been some short-term volatility. I'm not selling. I don't intend to. Nobody I know is selling. If you're going to own this, just be prepared for a lot of volatility and think long term.
Great. Gary, on to thing number 4 of the British are coming issue, and the British are finally here in thing number 4. The UK has its first Labour government in 14 years.
Yeah, so this is a hat tip here to Alex, our new intern who joins us from the UK. I always like to remind him he's a British subject. I always like to ask if they're owned by the crown, or I'm not sure exactly who's entitled to do what there. But the UK has had a Tory government, a conservative government for 14 years. That's a long time without a change. I think, the country is fed up. They were ineffective. They didn't really deliver on a lot of their promises. The economy has been a little bit weak. Um, Brexit was that was a conservative idea. It was a good idea, but poorly implemented. Um, and, like the United States, Great Britain is having some very intense, and also like France, they're having some very intense debates on contentious issues like immigration and their policies. And, the conservatives did not deliver on the things they told the country they would do. And so, Alex pointed out that we've had a massive, um, it was just a huge win by the Labor Party. It's not just that they went from out of power for 14 years to in power. They won a huge majority. I think it was a record number of seats in parliament that turned over.
Did I don't remember. Did Alex give us a prediction on this election?
He correctly predicted a Labor landslide. So, credit to him for predicting that. And in fairness, this was one that everybody knew going in. It's everybody knew it wasn't going to be close. The last couple of conservative prime ministers, Liz Truss and Rishi Sunak, were ineffective. They did not last long in office. It was just not a good example of strong leadership. So Alex was right. He did predict it. His analysis, though, was really, really interesting. This was Alex's point on the outcome of the election. So the story in the press was 14 years of ineffective Tory government, conservative government, combined with two very weak, short-termed conservative prime ministers in a row, led to this Labor landslide. And that's the story. And Alex's analysis was very different. And I thought he had a really insightful point, which was it wasn't so much Labor winning, it was a split on the right. So Rishi Sunak was leading the Conservative Party, and Nigel Farage was basically running a third party platform. And Farage's he challenged the Tories from the right and siphoned off votes. And so what happened was everybody on the left voted Labor, and everybody on the right split their vote. And so it wasn't as big a win for Labor as it seemed in terms of when you count up the popular vote. In terms of seats in parliament, it was a total wipeout. But it reminds me of, things that we've seen here in the US. So if we go back to 1992 here in the US, Bill Clinton won the 92 election without winning a majority of the votes. And a big part of that was Ross Perot siphoning off a lot of the small government, pro-business, free market votes that normally would have gone to then President George Herbert Walker Bush. And then, so, you saw that split there. And then, you saw last decade, we almost had that split on the right again, where the Tea Party was going to siphon off votes on the right. And the reason it didn't happen, and the reason President Bush had a congressional majority, and then the reason why President Obama lost a congressional majority, was because the Tea Party didn't split off. They basically stayed close to the Republican Party and didn't siphon off votes, and would, they'd primary each other, but in the end, they didn't run against each other. They ran against each other in the primaries, but whoever won had the support of both sides. And because they didn't split, the Republicans were able to hold on to a lot of congressional power in those years. And then, there are people who go back to the 2016 election, where, it was a pretty tight election between President Bush and President Trump and Hillary Clinton. But there were people who said, you had, Green candidates pulling off a small number of votes, that the votes on the left got split, and they didn't win a lot. It was just a couple percent. I think it was Jill Stein. But that couple of percent, could have been enough to swing certain close states. And so, this is the thing that Alex is saying happened in the UK, we've seen that happen here in the US, where, he thinks it was more a matter of conservatives and people on the right splitting their vote than it was the whole country shifting to vote for Labor. I thought it was interesting, insightful analysis by intern Alex. Nice job.
Great job, Alex. Wrapping up this week, Gary, as we talked about, we're talking restaurants. Thing number 5, and I think probably to no surprise, restaurant sales are down.
Yeah, so really nice work by other intern Andrew on this. He was the one who did the research on this one. Um, so we have seen closings at, here we go, here's the list: Cracker Barrel, Red Lobster, Hooters, Applebee's, TGI Fridays. I can't believe we're actually talking about Hooters on this. All right, maybe we
Yeah, a
should.
few of my friends are going to be very upset.
All right, maybe we need to bleep this out. Anyway, look, here's the deal.
I won't name names.
Right, yeah, no names. Um, during COVID, the government handed out huge checks to people and everybody had to stay home. So, restaurant sales, travel sales, tickets to concerts, sporting events, all of that stuff plummeted. People stayed home. They were given money by the government and they were able to save a lot. And then when those restrictions started to be lifted, the country had its highest credit rating ever. People had a ton of money in the bank. They were sad and frustrated from a couple of years of being stuck at home, and they went out, and I think the term was revenge spending. People took vacations and spent a lot of money on Taylor Swift concerts. As you know, she's responsible for inflation. Um, and restaurants did really well. But what's happened is they've had to raise prices, and people have gotten to the point where it's just enough. And so we've seen a little bit of a dip in restaurant sales. It is potentially an indicator that people aren't doing as well as some of these economists say. Again, I'm going to go back to the idea that we have a bifurcated economy. And in general, people who are making good money, who have cash in their pockets, going out to eat is one of those things that, Americans like to do. And it's a nice way to be comfortable for an evening. When money's tight, that is one of the easiest places to cut back, and people start to grocery shop more, prepare more at home. The negative is that's not necessarily so great for the economy and restaurant workers. On the positive, they're probably eating a little healthier. So, good for the medical health of the country.
Gary, are we close to a disaster yet? Where does this kind of fall in terms of panic mode?
No, we're not in panic mode. I think Andrew did a really nice job. He graphed it out and showed. So in at the bottom in 2020, restaurant sales were, I think it was like $30 billion, and it rose up over the last few years to almost $90 billion. And we've seen a bit of a dip. It dipped a few $1 billion, but it's still above 80 billion right now. And so it's a small dip. It's not a disaster. We've seen bigger dips. The reason we're focused on it is because that is a place where you would expect to see early weakness. And, it is something that, we've been focused on: the fact that we don't have an economy that's working for everybody. We have an economy where a small number of people are doing well. A lot of people are getting government money, and a really large number of people are just struggling. And so, you'd expect to see that in weaker restaurant sales, but the drop isn't huge. It's not panic time yet. Or said another way, the small drop in restaurant sales is not going to be enough to get Powell to lower rates. So higher for longer, I guess, is our conclusion to everything right now.
Pretty much exactly it. Gary, any last thoughts to close up the episode?
No, just the usual, for everyone watching us. Thank you so much. We know your time is really valuable. We appreciate it. Thanks for spending it with us. Looking forward to seeing what we're going to come up with next week. Just so everyone knows, I have handed over most of the work for the 5 things to Andrew and Alex. They're young and just starting to get some experience, but they're smart and they're driven. And based on the work that I've seen, I have every confidence that they're going to do a great job next week. And we'll look forward to coming back to you next week, hopefully with more great content. And, thanks to Andrew and Alex and the guys at Zero Hedge for helping us put all of this together.
Gary, thanks so much again for this episode of The Five Things. Anyone that's watching, please check out deepknowledgeinvesting.com. There's an option to subscribe for a free subscription, as well as premium subscribers receive access to current recommendations from Gary, real-time alerts, market analysis prior to everybody else, especially delivery of the 5 things, as well as our monthly newsletter. Would love if you would consider. That allows us to continue to produce great content, keep you in tune with everything you need to know about the market. As always, Gary, pleasure working with you and doing this show with you. I know I gained tons of valuable insights from everything you guys put out, and really happy to be a part of this. Gary, anything else?
No, Rob, thanks so much. Look forward to doing this with you next week. Everyone, have a great week. We'll see you next Monday. Thanks.
Thanks, everyone.